Hello, in this video, we continue to read the book, The Cashflow Quadrant, written by Robert Kiyosaki, the one who wrote the famous Rich Dad, Poor Dad book. And in this one, he's saying, what happens if you pay off your mortgage? Video number 59. Please join me. Hello, welcome to Take a Step to a Better You. If you are new, welcome. If you've been here before, appreciate you very much. My name is Sherifa, Nakalema. I'm business owner here in Virginia, USA. And here, I share what I know and continue to learn in the areas of business, of earning money online, of personal development, and sometimes YouTube tips and motivation. So, if any of that sounds like a good message, please consider subscribing if you are new. And those of you who are returning, if the button is still red, look at it below this video. You haven't subscribed, please support this message and click on the bell and select all so you're notified when I have new videos. Let me start by showing you my schedule. But in this video, I'm going to read the book, The Cashflow Quadrant, and the title is, What Happens If You Pay Off Your Mortgage? But let me first show you my schedule. I'm here daily, Monday, Tuesday, Wednesday. I read books like this one, business tips through books. Then Thursday, I call it free day. I go drive around USA, I show you. Wednesday, Friday, I come live, and Saturday. Wednesday, general audience, everyone is invited. Saturday, only if you care about affiliate marketing and online. Then Sunday is motivational day, 9:30 a.m. USA Eastern Time. Only on Sunday. I change that. I come later, just for my people who are viewers, especially in Africa, where the time tends to be much behind me. So that's for Sunday. Now, please consider subscribing and support this message. It's about taking a step to make our lives better. Have over 300 videos. Watch them. And if you're new, and even though you who have been running, I don't think you have watched all of them. You can click on the playlist and see. Like, you read the playlist, what it's about, and go switch between and see what you like and what you don't like. It's a lot. Okay. This book is called The Cashflow Quadrant. And Robert Kiyosaki named it like that because he's talking about how we earn money. It comes to us, on the left has an image. On the left as you are an employee, maybe, or you're a self-employed person, or a small business owner. That's the left. It's not good. And according to him, and according to this message. And then on the right, you are a large business owner, or you are an investor. So he's exploring those quadrants and telling us how people behave, how people think according to the quadrants, and he's encouraging us to cross from the left to the right. That's what this is all about. This is video number 59. Like I said, what happens if you pay off your mortgage? But before we go to that, I have to remind you what we did. Video number 58. 58, he said, know what your risk is. And he had started talking about the house. It's like a continuation of the message. He talked about that a house is not an asset. So if you care about knowing what he said in that, but that message is very well also in this book. I have 68 videos about this, Rich Dad, Poor Dad. He kept saying, yeah, a house is not an asset. You need to know what an asset is. So if you care about what we finished, links in the description, but also a pinned comment and also at the end screen. And then if you want, audio is free for this one month. And also a physical book, you can go buy. Amazon.com is all in the description, right there. Physical book, I made it convenient for you. You've not been seeing it. I put it very close. You just click and go. Or for the audio, you have to search. Once you get to the Audible, go to Audible, you search for the title. It takes you to a space where you search in the catalog. But it's free for 1 month. But you have to give them your name before they can allow you to get it for free. Now, we're going to the reading, but I promised for those who watched the previous video that I'm going to define what a mortgage is. So I'm going to read, and remember he said the title is, What Happens If You Pay Off Your Mortgage? Now, I know he has used the term mortgage before, but let me define it now. For those of you who don't know, especially if you don't live in countries where homes are on mortgages, where you just build your house. I grew up knowing you just build your house, you own a house. But here, you just buy a house, and then you have a mortgage. So what's a mortgage? This is technical. I got it from somewhere. It says a mortgage is an agreement between you and the lender, assuming you are buying the house. You and the lender, which could be the bank, allows you to borrow, is an agreement between you and the lender that allows you to borrow money to purchase or refinance a home, and gives the lender the right to make your property, the right to take your property if you fail to repay the money you have borrowed. This is serious business. Let me read it again. Mortgage is an agreement between you and the lender that allows you to borrow money to purchase or refinance a home, and gives the lender the right to take your property if you fail to repay the money you have borrowed. And he used this definition used the word refinance. You know, you could borrow. Let me explain quickly. I know for those of you who came just because of the topic, I like to explain things. So you could borrow, for example, what is common that the first time you go borrow to buy a house, they give you 30 years to repay. 30 years. So can you imagine if you got into this mortgage business at 30 for your house? It's going to, if you're 30 years, you pay it off at 60. So what happens in middle there, as you keep going, you could choose to refinance. You see, they use the word refinance. You could say, you know what? Maybe you paid off 5 years, you have 25 left. You can go and say, I want to reduce this. So you go refinance and change it to a 15-year mortgage. So it changes. You have 25 years left. Now you have only 15. So you cut it off by 10 years. That's a refinance thing. It's still a mortgage, but it changed from 30 to 15, whatever terms, okay? I had to explain that because I keep hearing you saying mortgage. Not everyone knows what a mortgage is. I hope that helps. Now we're going to read. He's saying, what happens if you pay off your mortgage? Remember I just said you could refinance, you had maybe 15 years, you pay, and soon you paid it off. You have zero. So what happens? Many people ask me, what happens if I pay off my mortgage? Is my house an asset then? Remember the previous video, he said a house is not an asset. So now, what if I pay off my mortgage? Is it an asset? Let's see what he thinks. But there people argue with him a lot about these issues that he says, the way he defines things. They argue with him. So he says, and my reply is, in most cases, the answer is still no. It's still a liability. There are several reasons why this is true. One is maintenance and general upkeep. If property is like a car, even if you own it free and clear, it still costs money to operate. And once things start to break, everything begins to break. In most cases, people pay for repairs on their house and their car with after-tax dollars. A person in the B and I quadrants, meaning the ones on the right, only include the property as an asset if it generates income through positive cash flow. So according to them, or according to him, and don't call an asset if it doesn't bring money to you. So anything that you pay out money for, according to him, he has this strict definition. He calls it a liability. But I think I'll disagree with him too, because if I borrowed $200,000 on a mortgage and I paid it off, my house has $200,000, at least it has value. I would say no to that one when it's paid off. But that's me. Okay, what do you think? I'm reading. But the main reason a house, even without a mortgage, is still a liability is because you still don't own it. The government still taxes you, even if you own it. Just stop paying your property taxes and you find out who really owns your property. That is where tax lien certificates come from, which I wrote about in Rich Dad, Poor Dad. I considered skipping this, but I decided let me read it. I was going to skip it. So it's going to be a little bit long, the video, but you know what? I may end closer than where I planned because I decided to read this. It's about the tax liens. I think it's interesting if you hear about it. So that's where tax lien certificates come from, which I wrote about in Rich Dad, Poor Dad. Tax lien certificates are an excellent way to receive up to 16% interest on your money. If homeowners don't pay their property taxes, because when you pay, now it's me, when you pay off your mortgage, you still have to pay property taxes every single year to where you are. Here is a county. That's how they are able to afford education in America, like lower level education, not college, because they pay schools and teachers everything expenses from those taxes on homes. So if homeowners don't pay their property taxes, the government charges them interest on the taxes owed at rates from 10% to 50%. Talk about being taken to the cleaners. If you don't pay the property taxes and someone like me pays them for you, then in many states, you owe me the taxes plus the interest. If you don't pay me within a certain amount of time, I get to take your house just for the money I put up. In most states, property taxes take priority in repayments even before the bank's mortgage. I've taken the opportunity to buy houses I paid in taxes for just a few $1,000s. I saw this happen. You know, when I used to follow Robert a lot. So when he talked about stuff like that, I went to the county to see how this really happened. They have a list of houses they read out, and they say how much they cost. And some of those houses were taken because they didn't pay property taxes. It's not like they have mortgages or whatever. It's because they didn't pay. Let me give you an example. It's a house that costs like maybe $200,000 or $300,000. It could pay like about $3,000, maybe. This is just a number, a year in taxes. So if you fail to pay those taxes, like 1 year, 2 years, 3 years, it could come like $10,000. That's what you owe. But remember, the house costs $300, the value of the house. Now they take it to the courthouse and they're selling it for just $10,000. But the value is $300,000. That's what he's explaining. So people with money, they come and buy them. It's like they just read the names and then you start bidding and you take it. So, but then there are laws that the person who is losing the house has a certain time to claim their house. But if you go there and they're selling property, especially if people are dead, people don't care. They don't come to claim it. So rich people just buy them. But even you, if you have the $10,000 in cash, you can go buy that kind of property. But I don't know that I like that kind of property because it's taken, or you just take it because of the taxes. Now, I just got off the topic. I had to explain that. Okay, talk about being taken to the cleaners. If you don't pay the property taxes and someone else pays that, I think I read that, yes. In most states, property taxes take priority. Yeah, they first pay the government for their taxes before they even go to the bank to pay the balance of the mortgage. That's so sad, actually. Now he said the definition of real estate. Again, to be able to see money, you must see it with your mind. Remember he said that before? Not your eyes. In order to train your mind, you must know the real definitions of words and the system of numbers. You must know the real definitions of words, W-O-R-D-S, you know my pronunciation, and the system of numbers. By now, you should know, now he's talking to us, the difference between an asset and a liability, and you should know the definition of the word mortgage, which is an agreement until death, and the word finance, which means penalty. You will now learn the origin of the words real estate and a popular financial vehicle called derivatives. Many people think derivatives are new, but in reality, they are ages old. A simple definition of derivative is something that comes from something else. An example of a derivative is orange juice. Orange juice is a derivative of an orange. I used to think that real estate meant real or something that was tangible. My rich dad explained to me that it really comes from the Spanish word real. By the way, I don't know Spanish, so those of you who know how to read Spanish, you know I'm not going to read this correct, but let's learn something, okay? It really comes, the word, that it really comes from the Spanish word real. I think maybe they say it differently, which means royal. El Camino Rio means the royal road. Real estate means the royal estate. I'm not a Spanish reader. I don't know. I read that right. Okay. I'm about to finish by now. I'm reading the last paragraph. I almost thought about skipping. You know, Robert likes to explain all these things. But then I said, where are we going to learn them from? Let me read it. So maybe it will benefit you. So it says, I'm reading one long paragraph. Once the agrarian age came to an end, you know, he loves history. He says he loves history, and that's where he learned all these things he talks about. Once the agrarian age came to an end and the industrial age began around 1500, power was no longer based on the land and agriculture. Then monarchs realized they had to change in response to the Land Reform Acts that allowed peasants to own the land. So royalty created derivatives such as taxes on land ownership and mortgages as a way of allowing commoners to finance their land. Taxes and mortgages are derivatives because they are derived from the land. Your banker would not call the mortgage a derivative. They will say it is secured by land. Different words, similar meanings. So once royalty realized that money was no longer in the land, but in the derivatives that came from the land, the monarchs set up banks to handle the increased business. Today, land is still called real estate because no matter how much you pay for it, it never really belongs to you. It belongs to the royals. What? That's very interesting. That's why I chose to read it. I thought it was boring, but there's a lot to learn. So that's the end of video 59. And that's actually my takeaway. It's like we don't own anything. You spend on, you work so hard. Like here in America, you pay off your house, you're so happy. And still, if you don't pay those taxes, they come and take it from you. You know, there's something funny. Let me add it here. Just, you know, when in USA, most areas, especially where we are here, when you own a house, okay, they have like companies that manage. They are called Homeowners Associations. Okay, the intention is good, but those people can be annoying. Because what happens, they want all the houses to look the same. Okay, the house they are built, and you have your house, but they make sure you cut the grass. They make sure when you take out, you know, we have trash cans, we roll out like here it's every Tuesday and Friday. So you take out your trash, the companies come take it, and then you have to bring back the containers. So these companies, if you fail to cut your grass in time, they think you took long to cut your grass, or they think they come and find the trash can was not put back in time. They have the rules. It can't come out, you take it out not earlier than 6 p.m. or bring back in not earlier. Like, they have these times that they don't want the trash can to be out. They don't want the grass to grow. They don't want, they have so many rules around, and they say that the reason they do that is keep the order, which is good, keep order, and also make sure everything looks neat and organized. But guess what? I read a story sometime when those homeowners association, right now where I am, we pay like $78 every month just for that, because they take the trash and they cut the grass, some areas, the common areas, and then paying for security. So someone didn't pay, was renting out a house. Sorry to make this video long. I thought it's an interesting thing to mention. Someone was renting a house to someone else. So the owner of the house was not living in the house. But of course, they were still paying that fee, whatever it was. It's a monthly fee. And now somehow, I don't know what the arrangement was, whether the person who lived in the house was the one who was supposed to pay, but this money was not paid. I think for some time, it got to an amount of like $2,000. And they were maybe sending reminders. The owner of the house never knew that the amount was not paid because of the people who are living there, they were renting. Those people, the homeowner people, and they tend to be people even elected from you, like they are the people managing. They wanted to sell the house. They wanted to sell the house because of $2,000. It was in the news that the homeowners, they had sent reminders because these people are not paying, so they want to auction off the house. I said, what? $2,000? They want to take the house? Yes, so that's the story. That's the homeowners. That's what I'm trying to say. Okay, you own the house, but still someone puts something on it, and the taxes come, and the mortgage people come. Like everyone wants something about your house. It's like you don't own it. And then the land, you just mentioned the royals. It's interesting. Put a comment for me. I think it's a boring video, but I think it's an interesting topic for some people. Leave a comment for me. Like I always end them. I have to remind you that you have links at the end of this video if you want to see all the videos that we finished. In the top comment, all the videos we finished. The description, if you want the physical real book, or if you want the audio. And again, I put the links to all the videos I finished. Like I always end them. Take very good care of yourself. Take very good care of your families. Take very good care of your health. Please like the video. Leave a comment, especially if you are not Premier. Please always leave a comment on the video. Not in the chat is if on the video, if the chat disappears, we need the comment to know what you think. Tell the others who come later what you think. Take a step to a better you. Bye-bye.